Hi, I'm Deepak again, bringing to you Market Vision's short takes. Today, we speak about how tough it is to make up losses after a steep fall in the stock market. We all know markets are relative, alright? So, if if you own a stock that falls from 100 rupees to 70, you've seen a 30% drop. At this point, you're thinking, 30%, I've lost 30%, what do I do from here? Most often, we think, I'll get out when it breaks even. Okay, so let go back to 100 and I'll be out. I won't book any loss, but let me, I'm happy to take 100 rupees when it comes back. But the stock needs to go up 43%. It lost only 30%, but it needs to go up 43%. That's why with everything in the market is relative. You can see how you've fallen a little bit, but now you need to work harder to get back to where you were. And if you look at the market, the more you fall, the deeper you fall, the more difficult it is to recover. Okay, so if you're at 5% loss, then it takes just 5.3%. Take a 20% hit, 100 rupee stock goes to 80. Now you're talking a 25% recovery. This may still be manageable, but look at what happens when it goes to 40% or 50%. At 50%, you're talking 100% gain. 75%, you're talking 300%. 90% is not shown on this graph. You're talking about 900%. Now, you lose 90%, you have to go 900% just to get back to your break even price. And you might think, this doesn't happen to everybody, but it happens all the time. Satyam, for instance, big stock fell 90% from 200 plus to rupees 20 in one day, right? So you literally saw it go from 20 rupees to 80 rupees, 400% gain. It went 4x. If you had invested at 20, you would have made 4 times your money. But if you had bought it at 200, you're still suffering, right? You're not happy. It's still at 80. You need to get back 200 just to break even. Right, there's so many other examples. There's real estate. The pack is down 80-70% from the 2007 highs. If you bought DLF, for instance, at 1000, it's at 250 to 300 rupees today. It's lost 70-75%. It's 3 years and you've still lost that. You've still got that money going. It's telecom, sugar, and media. All these stocks that deeply battered. So the question is, what do you do? First, if you have the option, don't let your stocks fall that much, right? So you've got a stock, it's falling down. Get out when the dips are 20% or more. That means you made lost 20%. Just exit, just sell. It doesn't matter. So if when you saw DLF go from 1000 to 800, at 800 perhaps that was the right time to get rid of the stock. It was over. The stories might be great, but it's lost 20%. It could lose more. This is typically called a stop loss, saying this is the maximum loss I can take. I won't take any more than this 20%, and that's it. That's one way. But what if you haven't done it? Okay, you continue to own a stock like a DLF. You bought it at 1000 rupees. It's a 250 today. What do? Forget the fact that you bought it at 1000. You've lost 750 rupees. The loss is sunk. It is over. It's in your face. You've taken the loss, regardless of whether you actually sold the share or not. The 750 rupees is a loss you should just forget. You have to consider that the stock is at 250 today. Can it go back up? That's all. That's the only question you got to ask. If you didn't own the stock, would you buy today? If somebody gave you money, would you buy DLF today? If the answer is yes, then you should continue to own the stock. If the answer is no, then sell and put your money in other places, right? Because if DLF is not going to go up 300%, you got to find another stock that can go up a lot. You don't have to think about the price point at which you bought the stock. You just care about the fact that, am I in the best investment today? Doesn't matter whether I've booked a loss or I have not booked a loss. The loss is sunk. All right, and we would love to hear your comments on this. It's just that much more tougher to make up losses once you've had a steep fall, and the steeper the fall, the more difficult it is for the stock to rise up. We'd love to hear what you have to say. Talk to us, visit our forums, register at marketvision.in, and thanks for listening.